Welcome to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stuart Willis of Asset Preservation Wealth and Tax. Stuart, how are you today?
Oh, living the dream. I'm kicking my son out now. He's heading back to college after the summer, so good stuff.
Was it a great summer, though?
Oh man, no, he's fantastic. He was a fun kid to raise. I would like to say it was easy to raise him, but. Yeah, I wouldn't say that. I want to be honest. But no, listen, all of it all pays off. It's all worth it. He's a fantastic kid that just makes me super proud. He's heading back to UCLA, and they're a little late leaving for the summer, and it's good stuff. But at least I'm enjoying the cool weather of Arizona. Right?
It is very cool. You don't even notice any heat at all. So, Stuart, obviously, I've known you for so very long. We've worked together for close to 4 years now, and every time we're together, I'm just watching you grow even more. So let's talk about the locations that you're currently in, and I think there's a new one on the horizon, if you will.
Yeah, so we are in right now. We're taping our show in our Tempe office. We call it Tempe. It's really South Phoenix, but on the Tempe border. Okay. We have our brand new Scottsdale office that's right on the corner of Frank Lloyd Wright and Scottsdale Road. So if you're eating over at Capitol Grill or Maggiano's, my front door is facing their front door, so it's super easy. And then, of course, we have our West Valley office over in Sun City, Surprise, Peoria area. So, all convenient around the valley. We are looking at a couple other offices in near Pebble Creek down there in the Southwest, and also over in Gilbert as well this year.
Nice. Oh my goodness, Stuart. Congratulations. I'm not surprised. What I love to hear from people that watch this show every week is that they know how busy you are, and yet you're able to give each client personal attention and personal service. So let's talk about what it feels like when someone first comes into one of your locations.
Yeah, I think that, chemistry matters. And I think that, I tell people all the time, if you don't like me in person, you are certainly not going to like me, on TV, and vice versa, right?
Right.
So did I get that backwards? But yeah, I am the exact same person in person that I am on TV. And like, I think communication matters. Chemistry matters. You have to be able to, have that communication back and forth. And I think the one thing that really separates us, obviously beyond the kind of likability that I think we have, we may not have it. I don't know. I may be misjudging. but I also think it's the fact that we talk about things other advisors don't talk about, which is primarily taxes in estate planning. Look, I hate running a tax office. It's a nightmare, but it gives us such in-depth information to do tax planning that I really think people are missing out when they don't talk about tax. But our tax office has made a tremendous difference. I tell people all the time, for the first decade of my career, I think I was faking it because, quite honestly, I didn't understand taxes. I didn't know it until I had delivered, thousands of tax returns to clients. I never had that sort of insight.
Sure, and you talk about a very holistic retirement plan, Stuart. Let's talk a little bit about the financial planning aspect. What makes your approach unique and different?
Yeah, well, I think one thing is that we don't just rely on the personal communication, which I think is important, but we also talk about, we have some of the most advanced software that exists in the financial planning world. And look, clients are just completely lost in terms of where they stand oftentimes when they come in. And, I'll see somebody that has put away $200,000, but they've made $150,000 a year, and they'll say, okay, well, I'm done. I think I'm good, to retire now. But then I'll see the person that made $60,000 a year and has $1 million saved, and they're like, okay, well, I'm really concerned about, hey, whether I can make it or not. And it's weird because oftentimes people's perception of their situation is completely distorted from the reality.
Sure, that makes sense.
But you know what? There's software out there that really illustrates these things. And I think it's important to be able to show people on paper that, hey, you know what? You're going to be fine. If you take, I'm making up a number, $4,000 a month, you'll have, $500,000 at the day of your death if you die at 85 years old based on a 4% rate of return. And look, these assumptions are all assumptions. We never know what the market's going to provide to us. But remember, this is evolving. It's about changing, refreshing. Because if you're looking at a financial plan from 5 years ago, you're basing it on assumptions, Cynthia, that just are no longer valid, no longer real.
That makes sense. Well, obviously, we know that goals are so important. So, Stuart, do you help establish goals for your clients with retirement?
Well, my job isn't to create the goals. My job is to discover what the goals are of the clients, and then we achieve them. So, for some people, they want to leave a ton of money to the kids. They're willing to eat dog food to make sure their kids, are past $1 million. Other times people are saying, I don't care about the kids. I want to bounce the check on the way out to the undertaker. And look, I'm not here to judge what you're trying to do. I'm here to accomplish it. Trying to make that happen. And I think it's important for me not to impose my position on you, but to find out really what you're looking to accomplish. And I think all of our advisors at all of our very convenient offices are there to help.
Well, obviously, that takes tremendous communication, Stuart. So let's talk about how important is it for good communication between the advisor and the client, and what is your style like?
Yeah, once again, I think it's tremendous. And, all of my personal clients have my personal cell phone number. And my wife thinks I'm a little bit crazy because, I get calls at, 10 o'clock at night on Saturday. And look, if you're going to call at 10 o'clock at night on a Saturday, I apologize for how I answer the phone if I'm asleep, because I'm kind of an old man now and I'm trying to get to bed early. My sleep is a big deal for me.
Sure.
But look, I'm in a good position in life today because of clients that have been there for us for the last, 25 years. This is, we started in 1997 and now here we are. And I think that, where I get a ton of questions from people is when we offer these complimentary portfolio reviews. First of all, I'll talk to people, they'll say, hey, I've been watching your show now for 3 years. And I'm like, well, why did it take you so long to call? And I think sometimes people just say, well, I'm not the kind of person that calls a TV show. I'm not the kind of person that does this. And I'm telling you, the who's who of Arizona is calling those numbers and seeking advice because, look, I think people that run companies, successful people, engineers, they know how to delegate responsibility and they know when they're above their head and they need help, right? But look, at the end of the day, technology is fantastic. I think it's really important. The tax planning is important, but communication is everything. And look, we've recently been getting in tons of calls from a local firm here that has gone to these sort of virtual reviews where they're no longer, the original advisor who sold them the concept is no longer servicing them.
Oh, wow.
They're now passing it off to some, call center on a Zoom call. And I had a client, this fantastic, client that came in the other day, and he's like, Stuart, it's a Saturday and you're the owner of the company. What are you doing here? Why are you meeting with me on a Saturday? And I have a very simple rule. The reason I can work Saturdays, the reason I can take calls at, late at night is I don't hang out with people I don't like. And you shouldn't either, right? And if you're being kind of switched off to customer service or to some, to some sort of, phone room to service you, well, that's not what you signed up for. And if you're being passed off that way, if you have concerns that you're not getting the attention you believe you deserve, and I believe you deserve, we'll offer you a complimentary portfolio review. That complimentary portfolio review is going to do a couple things. Number one, it's going to show you what kind of risk you're actually taking. It's going to tell you whether you're diversified. It's going to tell you whether you are in the right tax classes. Does it make sense to do tax planning? We are in one of the most efficient tax windows in history right now. We'll take a look at whether your estate planning, your living trust, is it up to date? Does it do what you want it to do? But most importantly, it's like a first date to see if the chemistry's right? To see if we're, if we're matchable, right? If there's a connection there. Because that connection is what matters. Because we tell people all the time, I promise to my clients, I will be there for you. If something happens to you, I'll be there. Right? But we have to communicate. If something's on your mind, you have to communicate. And if you're not getting that kind of communication, then we'll give you that complimentary second opinion. But give us a call at 833-602-7526. Don't wait. Don't delay. Call now. We have operators standing by. Or if you click on that QR code, it'll take you to assetpreservation.com. That's where we have our complimentary portfolio review. You just click on that. we'd be glad to help, but you have to take action.
Stuart, thank you so much. To our viewers at home, that number to call, 833-602-7526. You've worked your entire lives to get to the retirement years, and you deserve to have the retirement of your dreams. Don't miss this opportunity. Once again, 833-602-7526. We're going to take a very short commercial break here on the Asset Preservation Hour. Don't go anywhere. We're going to talk about bonds in your portfolio, and most importantly, how to plan your perfect retirement. Stay tuned.
You've got quite an extensive resume. Wow, so many years of management. Bet that was fun. So this job requires basic knowledge of the social media and video platforms, content creation, and SEO. How proficient are you in those areas?
Going back to work after retiring is not ideal. I'm Stuart Willis with Asset Preservation Wealth and Tax. If you have amassed a nest egg, it's time for a financial advisor to help you reach your retirement goals. We are in one of the greatest tax windows in history, so it makes sense to take advantage of this tax discount while you can with your partners in retirement. All of our expert advisors, CPAs, and enrolled agents are fiduciaries that specialize in retirement planning, tax mitigation, estate planning, and more. Plan your retirement right. Call right now for your own complimentary portfolio review and tax analysis.
Welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stuart Willis of Asset Preservation Wealth and Tax. Stuart, I should tell you that commercial that plays in between with that lady that's going back to work. Wow, the world has changed, obviously. You can tell from when she was working. So how is that detrimental to someone trying to re-enter the workforce after retirement?
Yeah, that's why it's so important to know. That's why that cash flow software is so important, because look, we want to make sure that when you're retired, you can stay retired, not have to go back to work, right? Because when we were filming that commercial, we basically wanted to create this image of this, lady that had worked very hard her whole life, and she decided to retire, but now she's applying for some job with some crazy millennial that just looks down on them. Do you know all of these SEO and Google and all, it's just complicated, right? And,
totally.
And the world's changing. Like, look, I believed, it's so funny. When I was in high school, I got voted all of these things in my yearbook, like most likely to be remembered. Never like most likely to succeed. I never got that one, but I got, all these kind of funny things. And at the end of the day, I even did a movie. People Google search me and they'll say, hey, are you a movie star? Are you a financial advisor? And I did this really horrible movie called Going Greek. And good luck finding it. If you find it, it's awesome. But I did it right after college. But I did these things so I could look cool to my kids, right? Like I figured, hey, one day I'm going to be, a father and I want to look cool to my kids.
Of course.
And so I did all these things. My kids still don't think I'm cool. They still think I'm this goofy old man that doesn't get it. And I think that that's what happens. When you go to re-enter the workforce, times change and it's hard to keep up. And once you're in that mindset of retirement, you just want to stay there. So get it right the first time.
Yes, absolutely. And part of getting it right, obviously, is having the perfect retirement plan. Let's talk a little bit about bonds, if we could, Stuart, because we haven't talked about those in a while. So how applicable is that 60-40 portfolio overall?
Yeah, well, so, bonds historically have been kind of the safety part of your portfolio. It's basically where conservative people go to make sure that they don't lose money in the stock market. But what we saw last year really kind of flipped it on its head because, last year, not only did stocks go down, but so did bonds pretty substantially. And remember, historically, the reason bonds are safe is because when you go and buy a bond, let's say you buy a 10-year bond that pays 5%. You're going to continue to get that 5% for that entire 10 years. And then when it matures, you get your principal back. So you don't care about the fluctuation in value. Well, what happens if interest rates lower? If interest rates lower, your bond values go up. And if interest rates go up, bond values go down. Well, that never really mattered to you in the past when you owned these individual bonds. But what we saw in the early 90s is a movement away from individual bonds to bond funds. And there really is no maturity inside those bond funds. So a lot of these people that bought a conservative portfolio, maybe they bought not a 60-40, but a 40-60, where they have, a 40% equity position and a 60% bond position. Well, those people got smashed last year. I'm going to pull up a slide here that's an illustration of the S&P 500 and TLT, which is the 20-year Treasury from iShares. It's their ETF last year. If you take a look at this, if you were in the S&P 500 last year, you lost 19.5%. If you were in this long-term Treasury ETF, you're down 32.5%.
Wow.
And here's the thing, is that typically when people have moved to these sort of safe positions, right, these bonds, they thought that that was the safe money.
Sure.
Well, here's the thing, Cynthia. What I'll tell you is that the reason you move to bonds is to protect you. Yet we saw last year it didn't offer that protection. And at the end of the day, people know they're taking risk in the stock market. That's why they're there. But in exchange for that risk, they want to be appropriately rewarded, right? They have the upside.
Of course.
But when you're in a long-term bond, for the potential of 4, 5, 6%, does it make sense to take 32% risk or 32% loss?
No, absolutely not.
No. So that's the thing, is I think the world has changed. When we saw this kind of massive spiking of interest rates, it was a problem, right? I talked about it. It's funny. Compliance didn't like it, but I was actually going to, flip back to one of the shows you and I did a couple years ago, where I say, look, we are in the highest stock market in history. We're in the lowest interest rate environment in history. Something's going to happen. And, I didn't want to be the I told you so guy, but we saw it coming.
Absolutely.
Right? We saw it coming. And if you just protected your downside, you could have avoided a big piece of it.
Absolutely. Well, Stuart, I have to talk about the elephant in the room, obviously. Let's talk about the amazing amount of government debt that we have right now. How is that impacting investors overall?
Yeah, I think obviously with all of this debt, we're seeing tremendous inflation historically. And look, it's subsiding. We're not seeing quite the inflation we once did. We're in that, sub 4% range now. Interest rates keep spiking and pushing it down. So, last year before, inflation was through the roof. But just remember, advertisers are really focusing in on those people that are afraid of the dollar failing because of the BRICS nations and everything else. Just understand this, right? You need to come up with, or understand one very solid thing. If the US dollar fails, don't be worrying about your retirement plan. I mean, that's when you go, it's Armageddon, right?
Absolutely.
So we're seeing a lot of these advertisements for gold. And look, I have some great, great radio shows on KFYI and KTAR here in town, AM 550 and KTAR, which are great radio stations. But what we're seeing is that their biggest advertisers for the conservative channel is gold. And these gold people are preying on the fears of people. And the problem with gold is that it's expensive the way it's being marketed, because sometimes you're paying 10% above spot to get into gold and maybe 10 or 20% to sell. And so how are you going to ever make up for those commissions?
That's true.
Right?
That is true. That's scary.
It's a very expensive thing. And when you start seeing gold IRAs, it's a problem. There's a way less expensive way to do it. I happen to be at the iShares corporate headquarters on their West Coast in San Francisco. And when I was there, they said, Stuart, you don't need to buy physical gold anymore. You can just buy a gold ETF. And rather than putting yourself into a position where you're paying 10, 20% to buy and sell, we can do it for 0.25% a year in an ETF. And I was just curious. I was like, well, how do you do that? How is that possible? Well, the way they explained it to me is they have their money in a big depository. I'm not going to say the name, but it's a big one. And, imagine these two pieces of paper here are pallets of gold.
Okay.
What happens is when somebody buys their ETF, they literally take a pallet off the banks and put it on theirs. And, they just take a block of gold, right? A brick of gold.
Oh my gosh.
And when they sell shares, they move it from here to here. That's why it's so inexpensive. And you can get the same sort of protection. Now, look, you're not going to have the physical gold in your hand. But at the end of the day, if you try to take that brick of gold over to the shopping center to go buy some groceries, they're going to look at you like you're a little crazy, right?
It's true.
Like in the old days, they used to bite it off or get a hammer and chuck it off. I mean, that just doesn't work, right? So I think it's expensive. It's a problem. There's more efficient ways to do it. And if you're concerned that you are in a portfolio that is being, touted because you're afraid, right? Maybe you're conservative and you saw way too many losses last year because you have too many bonds, or maybe you're in one of these target date funds that rely on the old bond methods. Well, we're willing to give you a complimentary portfolio review. We'll show you what kind of risks you're taking by being inside that portfolio, what kind of fees that may be hidden in the background, and what kind of tax implications you need to be aware of moving forward. But you have to take action. We'd be glad to give you that second opinion, but all you have to do is give us a call at 833-602-PLAN. That's 833-602-7526. Or even easier, if you go to the website, assetpreservation.com, we'd be glad to help. Even easier, click on that QR code. It'll take you right to us.
I love the QR code. Thank you, Stuart. To our viewers at home, the number 833-602-7526. We know that you've worked your entire lives to get to the retirement years. You deserve to have the retirement of your dreams. Don't miss out on the complimentary portfolio analysis. We're going to take a very short commercial break here on the Asset Preservation Hour. But do you know how diversified you are? Do you know what your risk tolerance is? We're going to talk to Stuart a little bit more in depth when we return. We'll be right back after this very short commercial break.
We know the market is going to get worse from here. This is the biggest monthly decline in 10 years. People's 401ks took a major hit.
Well, my investments are tanking. My retirement isn't going as planned. I can't believe I let my kid talk me into buying crypto. I mean, what is that anyway?
This was the fourth worst contraction in history.
So how are you two doing?
Your financial future doesn't have to be uncertain. I'm Stuart Willis with Asset Preservation Wealth and Tax. If you have amassed a nest egg, it's time for a financial advisor to help you reach your retirement goals. We are in one of the greatest tax windows in history, so it makes sense to take advantage of this tax discount while you can with your partners in retirement. All of our expert advisors, CPAs, and enrolled agents are fiduciaries that specialize in retirement planning, tax mitigation, estate planning, and more. Plan your retirement right. Call right now for your own complimentary portfolio review and tax analysis.
Welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stuart Willis of Asset Preservation Wealth and Tax. Stuart, I want to piggyback just a little bit back to gold if we could, because we're talking a lot about the advertisements that we're hearing, but wow, we used to be hearing crypto, 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 but now it's gold, gold, gold. So what's going on with crypto, gold? Can we talk about that for just a moment?
Yeah, I mean, I think that commercial, really scares people, right? You say, my son wants me to get in crypto, and I'm not very cool if I don't get crypto. And you know what? I thought crypto had kind of gone away, and obviously we're seeing a shift to gold right now in advertisements. But I've got a friend right now who's not a licensed investment advisor, has no licenses at all, but they're selling concepts of how to invest in crypto just like he does, because he comes from a wealthy family. All of a sudden, he's the brilliant guy because he invests in crypto. It's tremendously risky. Yeah. Just know that. Yeah. We would never offer direct crypto to our clients. I want to be in business 5 years from now. Right. I certainly don't want to be sued out of business for selling crazy stuff. I would just say be careful, be wary. If you can invest in crypto, invest with money you're willing to lose, because we don't know. And look, don't get me wrong. BlackRock says they want to democratize cryptocurrencies. Great. You can buy the ETF, but at least you have the backing of someone else kind of watching where it is.
Sounds too scary for me, but let's talk more in depth about risk, because obviously it's so important for someone to understand what their risk tolerance is, Stuart. So let's talk about how important that is with the portfolio analysis.
Yeah, I think when people come in, they're just surprised. When we go through a risk questionnaire and we'll say, well, how much are you comfortable losing? If the market drops, how much are you comfortable losing? And they'll say, well, I don't know. I say, okay, well, if you've got $100,000 and this thing loses $5,000, is that okay? Oh, yeah, that's comfortable. How about 10, 20, 30? Eventually, you're going to hit your pain tolerance where you say it's too much, right? Absolutely. But what we do in our analysis is we back test those results and we compare them to what their answers were. Oftentimes, people are taking way more risk than they thought. Yeah. They had no clue. Wow. And I'm telling you, one of the biggest things we see isn't just the risk that they're taking, which is usually way higher than they thought, but it's also the fact that, they're not properly diversified. Yeah. And I'll tell you what, when it comes to, underlying investments, it's really important that you don't have all your eggs in one basket, and that's proper diversification. Sure. And Stuart, obviously, we looked at the market last year being a roller coaster, if you will. Did you have a lot of people, or not your clients specifically, but did a lot of people see a large amount of losses overall? Well, it's interesting. I mean, look, even some of our clients, obviously, we saw some losses. I mean, the market was fully correlated. The stocks, the bonds, everything went backwards. So anybody who says they didn't lose money last year is lying, or or they bought, some mysterious investment that, doesn't make a lot of sense. I mean, the markets went backwards, right?
Yeah.
At the end of the day. But I think people are just concerned that they weren't prepared for that kind of loss.
Yeah.
And I think it's important to communicate. And I tell people all the time, look, I've had an easy decade of my career because the markets went straight up for a decade. And last year was a really tough year because I went from, and I told you guys, I give everybody my personal cell phone number. So I went from getting, 5 or 6 calls a day and text messages to 40 or 50, and people were just scared.
Sure.
But I think more than anything, diversification matters. And when we talk about diversifications, I think people just kind of touch on it, right? When they look at it, they say, oh, well, I've got this pie. My chart that they give me shows me that I have large cap, small cap, international, bonds, blah, 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 fixed. Well, that's a diversification of investments. What we're also talking about is a diversification of tax strategies to make sure that maybe you need to consider whether a Roth is right for you. And if you're already done working, maybe a Roth conversion makes sense for you so that we can plan for, because we are in the most efficient tax window in history right now. And it's going away at the end of 2025 if Congress doesn't act and extend the Tax Cut and Jobs Act. But the other kind of diversification that really matters that nobody talks about is a diversification of perspectives. Because generally, Cynthia, when people are dealing with a financial advisor, it's that financial advisor that's picking their funds for them. And just know this. Look, if you watch the conservative news channel, you see the world one way. If you watch the liberal one, you see it differently. 2 different smart people can see the world differently. Don't you think that affects your money managers, your financial advisors? What if your advisor's watching the wrong channel? Right?
Wow.
And people we're so polarized politically. It's crazy. I get phone calls all the time. Stuart, you're this crazy liberal. Because I went to Berkeley, I'm a crazy liberal. But then other shows, they'll say, Stuart, you're this nutty Republican where your opinions are clouding your perspective. Listen, I try to be down the center, right? I try to make sense, at least from a business perspective. But I ask you this question. What if your advisor's wrong? Don't bet your whole life savings on one point of view. We use multiple money managers. Some are on the left, some are on the right, some are in the center. But it's a chorus of views to make sure that if one guy gets it wrong, it doesn't bring down your entire portfolio. So if you're concerned that your entire life savings is based on one person's point of view, maybe it's a financial advisor, maybe it's your spouse's point of view. What if they're wrong? If you don't want to gamble your whole life's work, we're willing to give you that complimentary portfolio review to tell you how concentrated your risk is. But you have to take action. If you click on that QR code, it'll take you to assetpreservation.com, or if you give us a call at 833-602-PLAN, we'd be glad to give you that second opinion. But you have to take action. Give us a call.
Stuart, thank you so much. To our viewers at home, most specifically, thank you for spending time with us today on the Asset Preservation Hour. That number, 833-602-7526. You deserve to have the retirement of your dreams. Let Stuart design a plan that's customized just for you. Be safe, be happy, be blessed. We'll see you back here 1 week from today on the Asset Preservation Hour with Stuart Willis.